Good afternoon, greater Philadelphia area. This is Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. She's Stacey Mitchell. We've got Gabe behind the camera, and we all work at the Tom Toole Sales Group at RE/MAX Mainline, the number one RE/MAX team since 2018 in Pennsylvania. And we have a special guest in this week from Alliances Insurance, Kevin Hamill. Kevin, thanks for coming on, my man. We're looking forward to having you on, chatting about real estate, insurance. How can people get in touch with you if they want to reach out? What's the best way? Website, phone number?
Best phone number is actually my cell phone, 267-614.
Let me start. Are you going to give your cell phone out on the radio?
Yes, I am.
Okay.
The level of service I provide, Tom.
Okay, I like it.
267-614-4234. Happy to be here. Thank you for having me.
Okay, so Kevin.
You're about to get a lot of inappropriate pics sent to you.
Yes. That would be fantastic if that happens. All right, we're streaming live every week. Facebook, YouTube, Instagram. Just look up Tom Toole Sales Group. Kevin is a wealth of insurance regarding a wealth of information regarding insurance, so we're happy to have him come on. The first topic we're going to cover this week, we're going to get into what's happening in the real estate market. There's been positive news here. This is like overly positive in some ways, with purchase applications jumping up again. We're also seeing housing inventory for the month of December dropped under 1 million homes for sale in the country. So purchase apps up, inventory's down. Ladies, what do we think here? What does this mean? What do buyers and sellers need to know?
I think that right now you can't really lay off the gas in terms of putting together a competitive offer if it's a home that you really want to get into. I think everything is case specific. So there's a lot of details that you need to look into, and you need to be working with somebody that can kind of structure it accordingly. Yeah, I mean, it's still competitive, and you need to be prepared to put your best foot forward.
All you sellers out there, time to list your homes. Yeah, it's very competitive. And what I found in the past couple of weeks that we're back to multiple offer situations. I heard rumors this weekend there was like 29 offers on a home that one of our colleagues put in. We're back to waiving everything. It is house specific, depending on the type of property and if it's move-in ready, especially. But sellers out there understand that now is the best opportunity. There's so little, we're below a month's supply in Chester County now.
I'm going to have the exact numbers for you here in a second.
So there is little competition. If you are sitting on the fence about listing your home, definitely now is the time. Reach out to your local agent. Go through, get all the info that you need to list your home. Get it on the market. There's many options for you to, if you don't know where you're going to look or move next. There's options that you can discuss with your agent. Sarah and I would love to do that for you.
Yep.
But yeah, now's the time to list, because with the least competition, you're going to have the best results.
So to give some perspective, Stacey, to answer your question, we're at a 1.77 month supply in Chester County right now. So what that means is that if no new homes came on the market, it would take 1 month and 3 weeks to sell everything. So that's a pretty fast pace. However, that's up substantially from what we saw most of last year, which was less than a month. I'll break down the rest of these numbers in a second. The concerning thing to me is that we're seeing multiple offer, and we even talked about this. I sent a video out at like 4 o'clock on Saturday night to everyone on our team saying, hey, don't think you can negotiate, follow the process, use our 14 questions that we tell people to ask so that we know what we're getting into. You have to have that multiple offer mindset, even if there's not multiple offers in on the home, because there could be more coming in. We're just having a conversation right before the show where there wasn't offers. Now there is one on a property that Sarah's working on. So this is happening. What concerns me a little bit here is that this inventory drop that we've seen, and it's been ongoing. If you look at the charts here and how inventory's been coming down, it's been a steady decline. I don't think there's any question there. It's going to cause prices to come back up. Probably even more than people realize, because there's still a lot of demand out there. If you look at our boy Logan Motoshami from Housing Wire, he followed me on Instagram this week, by the way. I was very excited. And he sent me a DM, so maybe we can get him on the show. Well, we're going to try. If you don't think that's happening, I've got some news for you. So With that in mind, we've seen that purchase applications have jumped up the past couple weeks. So we're seeing that there's more buyers entering the market, and that's real-time demand when we see that happen. If that continues, I'm worried the Fed's going to do something silly here in February to respond to this if they see housing prices pop back up. That's just my take on this. I mean, are you guys feeling the same way? I mean, we can look at the CME Market Watch tool and see what it's still at that like 94% chance the Fed goes up 20 basis points instead of 50 basis points like they had been. I'm nervous the Fed is going to take this the wrong way because we have an inventory challenge. There's still homes selling. We've seen the number of homes that have sold. There's an inventory challenge. I'm worried that because what it's going to do to pricing, they're not going to like that inflation data that comes out of it. That's my biggest concern here. And I don't trust the Fed, by the way. Stacey doesn't either. I can tell by her laughing. So what do you two think about that? And Kevin, feel free to chime in here.
I mean, I feel like rates have finally stabilized a little bit to where people are comfortable with them. It's like good news when we're talking rates, even though it's obviously because, again, we're not 2 years ago or a year ago. We're today. So these are the rates. And it's been positive. So that would be a blow to really everybody if they creep back up again.
Yeah, and the Fed should be happy because there's a lot of layoffs. A lot of the big tech companies are laying off, and they're continuing to lay off. And that's what the Fed's wanted, So they're doing things to try to ease inflation. And if they continue that trend, they walk a very fine line because depending on what they do, if they push it just a little bit too far, it could be catastrophic for the economy. So, I mean, I'm hopeful that they don't overplay their hand. But like you, Tom, I don't trust them at all.
What concerns me a bit is that we've seen them just go so extreme on stuff, and they're looking at lag data. Like we're talking about purchase applications. That's real time. That's what happens like over the past week versus inflation's always like a month old. And this idea that they want to put people out of work because they've been pretty I don't see how that's good for anybody. And This isn't, my economist sort of view. I don't see how that's good for anyone when they're trying to fight inflation. Like if we want the market to crash, we can, they can certainly push to do that, but it's not going to help us here. So now the CME Market Watch tool. So it's on CMEgroup.com. This is a company that's out there that they actually predict what the Fed's going to do. So the numbers have risen. So since last week, we were at a 94.7% chance there's a 25 basis point increase. Now it's up to 98.1%. So that's pretty interesting to me. And 25 basis points, I think, is doable. I mean, that's obviously less than 50. They're still operating off this lag data. Now, we are seeing inventory come up. So, Stacey, to answer your question, the Delaware County, we're seeing a 1.73 month supply of homes on the market. In Montgomery County, we're seeing a 1.54 month supply of homes on the market. And Philadelphia, that's a different market down there. I think it's really important that we acknowledge these things are so local, even though we cover a large area. You go into the city, just to give some perspective, as of the end of December, there's 4,148 homes on the market, and only 874 went under contract in the month of December. So if you just take that quick math there, that's a 4.74 month supply. So that tells me there's probably more opportunities for buyers to avoid these multiple offer situations in the city. And obviously this goes neighborhood by neighborhood. I just don't see our market behaving the same way that a lot of other markets are. And that might be, if you look at that Goldman Sachs prediction and like that we're going to be a flat market this year, I think these inventory levels really demonstrate that compared to what we're seeing across the country. So with that, the other piece of market data here I wanted to share is that 92% of millennials, who have been the biggest population of home buyers, they're saying that inflation has altered their buying plans. And that comes out from a report that was done according to, it was a millennial home buyer report by the Real Estate Witch, which is another one of these, it's powered by Clever, which is one of those like discount broker sites. But they do some legitimate research. And 1 in 4, 28%, a little more than 1 in 4 have postponed home shopping altogether. Do you think that's a result of what we're seeing here in the market the first 3 weeks?
Yeah, that's a big number, actually, 1 in 4. But I wonder if it's, what are they postponing for? Like, and how long? Because I think the trend is going to continue this for another couple of years as far as like the inflation. I don't see it dropping considerably anytime soon. And I definitely don't see interest rates changing that much anytime soon either.
Definitely not going as low as they were.
Exactly.
Tell us more about that, Kevin.
But well, as you guys were talking, I'm thinking in my head, and I'm not, doing real estate all day, every day like you guys, but I feel as if it's kind of normalizing, right? Back to because a couple months ago, a year ago, the interest rates were extremely low, like we've never seen before. Mm-hmm. So if you're holding off for that to happen again, it's probably not going to happen.
Right.
Correct.
Right.
That's a correct answer.
They were the lowest rates in history since being recorded. Everyone forgets this. Like 3% was the lowest ever. So Kevin, to answer your question, so of these 28% of millennial home buyers postponed, according to the respondents in the survey, rising rates were the number one obstacle, with 47% pointing to high rates, and only 29% compared to 59% last year see buyer competition as the obstacle. My view is these buyers are jaded because they saw these low rates and they're used to like 6, and that they think 6 is high, even though we know 6 is very low. And their alternative is renting, so I don't really get that. I mean, that because the rental prices have never come down. So I think to your point, I don't think they have the right perspective in what's going on in the market.
Right.
Maybe they should just adjust their home search criteria.
Right.
Because they still need to get into the home. You have to get into the home. You have to start somewhere.
Right. And if this is your first home, and like maybe you're not going to be able to just move once and then have that be your forever home. Yep. Like you may need your starter home. Like that's something that like has existed always.
Back in the day.
Right.
Back in the good old days.
Aging me, I had a starter.
Yeah. I mean, like, so maybe it doesn't have every single thing, right? Mm-hmm. But it's something that can work for you. And if it's something that makes sense for a couple years, like, no, don't go get into something that you're going to be that you will have outgrown within a year, or that isn't going to fit your needs for the next year or two. But if you plan to be there for at least like 3, 4, 5 years, that's a great one to get into for now, and then build equity, and then your criteria can change a bit for your next one when you cash out on this one. So you might not be able to get it all in your first purchase.
Well, a lot of buyers tend to forget that. I mean, if you talk to people that have been experienced in the housing market, they've lived in maybe 2 or 3 or 4 is a lot. I think 4 is kind of the number where people jump around a little bit, but typically, like the average home buyer or seller, they move every 11 years, right? So millennials, they're anywhere from their like late 20s into early, like late 30s, early 40s, depending on how you look at that. It's typically like a 20-year window that they look at for generations. Well, they didn't buy the first time, and now a lot of people historically have moved sooner than that to the second home, but they're kind of catching up. And if you look at like net worth and assets, when you buy a home, your net worth increases tremendously. I think the numbers from Keeping Current Matters, where the average homeowner has a net worth of like $400,000 to $500,000. The average renter, it's like $33,000 is their average net worth, because they don't have that bank account they're paying into. And according to the survey, 81% said they wish they bought a home before the Fed began raising interest rates. So and then
see,
well, yeah,
we told them.
Well, when the interest rate was low, the prices were insane. People were paying so much money over lists. So, like, how much were they really saving?
But it's still happening.
A lot.
We're back to that.
Back over waiving inspections, which I think is a...
Yeah, so it's like, would you rather get into it back when you had a 3.2% interest rate and you're going over like 25, 50,000, or do you have to now with even higher price points and you're going in 25, 50,000 over asking at a 5.5% interest rate? So if they purchased 2 years ago, which I have people who put it off because the competition, and they're kind of kicking themselves in the butt right now because they didn't purchase. Mm-hmm. You know what I mean? It's not going to get better. And as Tom always says, to try to time the market,
right, it's
always a bad idea.
Right.
Yep.
Well, so here's the kicker on this survey, and this all contributes to what's going on in the market. 3/4 of millennials, 75%, think we're in a housing bubble that could burst in 2023. I mean, I don't know what they're watching or if they're just making this up as they go. I see that as the least likely thing that will happen whatsoever. So what I find is that it seems like they're paralyzed by fear of, is it too soon to buy? Is it not the right time? And sometimes you just got to make a decision and go with it.
Yeah.
And that paralysis, and we've seen this with buyers, I would argue, and sellers in some cases, when you can't make a decision, no decision is often the worst thing you can do.
Right. And
And then you're watching the market pass you by. So millennials are in a tough spot, and a lot of them are forming families now. So the housing becomes more of a necessity than when you're in your 20s and you want to have a certain kind of lifestyle versus like when you have kids, your needs change dramatically. When you have a family, or your needs change dramatically. So there's a lot, and the inflation has hurt these folks the most because housing prices have jumped up so much the past 2-3 years.
Right. And I mean, I think like what goes into that too, I certainly understand. Like there is always like fear that you're going to do the wrong thing, or that you're going to make a mistake, or whatever, right? So let's say you do find the right house, and maybe the interest rate isn't ideal, but you can make it work and you can close on that house, and then interest rates drop. That's not bad news. That's good news. You can refinance.
Yep.
Like that doesn't mean that you messed up. You secured the house. You have the house. It's yours. Now you get to pick if you want to refinance or what you want to do to structure it differently. If you don't have a house to refinance, it doesn't matter if the rates go down, because now competition's going to go up. When you go to try to get into the house, prices are going to go up. Like,
That's a great point.
you know, if you need to make a move, and if you can make it work, don't focus so much on what could or could not happen later. If you love it and you can afford it and you can like maintain those payments as they are now, then maybe something will come along better later.
Give me a call, right?
Give me a call.
Yeah, exactly.
Give me a call.
And you have to really put things in perspective and be realistic about what you're looking for.
Right.
You, like Sarah said, like you already covered, you're not going to get everything that you want in your home. That's not realistic. And we always say if it hits 75% of your checklist, then that's it. That's a winner, right? I don't know anybody that's gotten 100%.
Right. And pick the most, like, prioritize. Like, pick what it is that really is the most important, and what are the things that are just, like, would be nice to have. And, like, what can you live with for now, and then maybe grow into, like, it maybe some point down the line you can do that renovation, or you can add on, or you can do whatever. But, like, can this work for you now and make you happy? I mean, you don't just want to, like, move into something that doesn't fit for you, but, like, what can wait, or what can, like, be changed later. And that can at least get you into something and have you start building your own, paying your own rent rather than someone else's.
Right. And you'll have that fixed mortgage.
Mm-hmm.
You know, you'll be in a fixed rate. You're not going to be in that rent that you don't know if it's going to increase next year. And really that is going to somebody else's mortgage and somebody else's insurance.
Yeah.
So you have to start, and you have to, get into the house so that you can start building on your own equity.
Mm-hmm.
It's so important. And I think it's just a mindset, and it is analysis paralysis.
Yeah.
You can overthink it so much. You put yourself into a panic situation, and then you just don't do anything because you're so, anxious about the whole process.
Right.
It doesn't have to be like that.
Exactly.
It's buying a house.
Right. And at the end of the day, if you did end up purchasing something and it isn't the right fit, you can sell it.
Yes.
Like the
Great
best,
point.
I mean, the best way to like really get the most out of your investment is not to just turn around and sell it within like a few months. You have closing costs. You have transfer taxes. Like there are other costs that are associated with it. But let's say you do make this move and jump into this house, and then you decide this wasn't it. Mm-hmm. You don't have to be stuck with it forever.
Right. Yes.
You can sell it.
Yep.
Well, and if you look at what they're doing, this article is really interesting because this is the biggest population of home buyers, and they're driving demand right now. So there's really 5 outcomes that they've pivoted because of the challenge with home buying. 59% say they're going to save more money for a home. That to me is not a great idea, because you'd have to save at a very high rate to catch up with what you're, like the difference between like a 10 to a 20% down payment or something like that. 36 have upped their budget, 36%. 28% have delayed their plans entirely. 26% are going to buy a fixer-upper, and 25% are going to buy a smaller home. So the people that are upping their budget, adjusting the condition of the property, or buying a smaller home, at least they're doing something, and they're going to reap the benefits of appreciation, tax benefits from buying a home. And that's what's continuing to drive demand. And 55% of these millennials still believe now's a good time to buy a home. It's just that there's a lot of worries involved there. And when with seeing purchase applications tick up, inventory higher here, but has gone under 1 million homes nationally through the month of December, I do anticipate we're going to see a pop in inventory. We've already seen it, in my view, in January, and we're going to continue to see that happen throughout the spring market. This is all the more reason to get informed. And so many buyers and sellers, they want to skip the initial meeting, right? Mm-hmm. They don't want to figure out what's going on in the process. They don't want to understand the market. And when they skip that, that's when they end up, because they think they know better, that's when they end up making bad decisions. And I just had a conversation with a couple folks on our team where the folks that will listen to them and schedule a meeting, a strategy session, a planning meeting with an agent, they're the ones that end up buying houses because they know what's going on. And there's just so much bad information out there. I'm clear, part of this is on the agents because they don't offer the meeting, right? I mean, I think that's been something we've talked about internally, but most agents are like, oh, let's go look at some houses. Oh, there's 10 offers. I don't know what to tell. And there's no, like, the folks don't know what's going on. And I'm sure you probably run into the same thing in the insurance business where
100%.
The folks that don't get informed
out there rather than, somebody that's a professional trying to actually help you understand what you're purchasing.
Mm-hmm.
I would imagine if agents were more committed to doing that instead of just trying to close a sale. Yeah. What did Phil Jones say yesterday? Don't shoot to kill or shoot to win. You shoot to educate. I thought that was pretty interesting. I'm clear that would solve a lot of this problem.
Mm-hmm. Yeah, fear of the unknown, right? So the more that you can educate your clients, it helps dissipate the fear. You know what I mean? There's always going to be questions. Mm-hmm. But if you've never been through a process before, you have no clue. You have no clue where to even start. So, of course, it's going to be, a little confusing and mind-blowing and stressful.
And I mean, I think the people that are going to be willing to take that, it's not like these meetings are like 4 hours long, you know? The people that are willing to take that, it can be 15 or 20 minutes to at least like break down the basics. Like, they're going to be the clients that you want to work with. If you have somebody that's like, no, I don't need, just take me out and show me the house, da-da-da-da-da. Like, more than likely, they're going to be the ones that you're going to have obstacles down the line. They're not going to get the process, and they may or may not be qualified. They're going to give you pushback on, many different steps. The people that are willing to sit there and be like, even if they think they know what's up, you know what I mean? But like, yeah, I'll take 15 minutes to talk to you before we get out and look at stuff and hear about what's going on. They're the ones that you're going to be able to actually move through the process with.
And if 75% of millennials think that we're in a housing bubble, and like Tom said, I don't know if they're just making that up or if that's wishful thinking, we really need to talk to those folks and let them know what's really happening in the market, because that's not where we are. And for them to think that and possibly be waiting for, all those foreclosures that are coming on the market,
right?
Then, they have another thing coming. So, it's definitely worth the time. Sit down. Like Sarah said, it doesn't have to take 4 hours. It really doesn't. Maybe 45 minutes to an hour. And then you're ready to go. Mm-hmm. And you can just see the relief on their face when a lot of their questions are answered. They understand the buying process. We lay it out in a real nice timeline there that it's a visual. And they can take it home and go over it 15 times if they want. Yeah, that's the
most important purchase of their lives. I don't understand why they wouldn't take the 15, 20 minutes.
Yep.
Because other people are telling them they don't need to. And that's the issue. And that's why there's such turnover in real estate. So, all these things are, the market has shifted back. I mean, I wasn't expecting this. I was expecting the market to kind of keep going the direction that it was. But inventory and demand and rates coming down have created a little bit of a different storm. So all that in mind, what I'm clear on is that you got to get informed. You got to know what's happening in the market, and you got to study things a little bit. And that's going to go a long way.
What I think is also interesting about this article is, it breaks down all of these different things. And then it says, that said, a majority of millennials say that they would buy a home with the following issues. 59% said they'd buy a home with foundation issues. Huh. Like, even just like that seems wild to me.
Insane.
Like, wow. I can see the leaky roof. Yeah, you can work around a leaky roof. Yep. It also said 67% would buy with a history of as a former meth lab. Like these are just like for all the fears that people have about I'm going to make the wrong decision and I can't move forward, but you want to accept foundational issues and meth labs?
Give me the cracked foundation. Yeah.
Right. Like no, like those are the ones that you might be like maybe we steer away from.
That's
wild.
insane to me.
That's wild.
All right, we're going to take a quick break. We're going to come back. We got 2 real estate stories we're going to talk about if they're news or not news, relevant or not relevant. And then we got Kevin Hamill. It looks like he's going to tell us what to do to make sure homeowners get the right type of insurance coverage. Very helpful. This is Tool Time Real Estate Radio on WWDB 860 AM.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America is an equal housing lender, NMLS 1285001.
For the best local mortgage service and great rates on your money, look no further than Mortgage America. We have been operating in the greater Philadelphia area for 40 years with a focus on smooth, easy access to home purchasing. Whether you're a first-time buyer, upsizing or downsizing, or just refinancing, we have programs for you. We also have closing cost assistance programs and access to subsidized interest rates. Pre-approval is free, no costs or commitments. To learn more, visit our website at mymortgageamerica.com or give us a call at 610-439-8000. We always have a person available to take your call with around-the-clock human service. Purchase your home with the personalized local service you find at Mortgage America.
Mortgage America is an equal housing lender, NMLS 128501.
The Tom Toole Sales Group is the #1 RE/MAX team in Pennsylvania with over $165 million in volume for 2021. I'm Tom Toole, and our team has achieved that kind of success by being a great place to work with and to work for. No one knows Greater Philly better than we do. We know real estate, but more importantly, we're real people. We hire the best agents, and we give them all the tools to succeed. Even our brand new agents sell 17 to 24 homes a year because our team delivers the best experience in real estate. Teams deliver a better experience than individuals, and we're a top 1% real estate team in the country. We call it AAA service. We're your advocate, ally, and advisor. Because this isn't a transaction to us. It's a relationship. If you're buying or selling a home, call the Tom Toole Sales Group at RE/MAX main line at 610-692-6976 or visit tomtoole.com. That's tomtoole.com. Sell your home for more, and remember the real estate golden rule. You always get more when you work with Tom Toole.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX main line.
Welcome back to Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacey Mitchell. She's Sarah Tymon. Gabe is behind the camera, and we all work at the Tom Toole Sales Group at RE/MAX Mainline, the #1 RE/MAX team in Pennsylvania since 2018. And we've got Kevin Hamill here from Alliances Insurance. He's going to give out his cell phone number again. Please send him whatever you like. There is no holding back there. Kevin, thanks for coming on. And so what's your cell again? What's if you want to send spam text, please do it.
Absolutely, Tom. It is 267-614-4234. I look forward to your picks.
Maniac. Okay, so 2 real estate stories this week. I want to get your opinion on both of these, see if you think they're actually real news or something that people shouldn't be concerned about. The first one, big tech merger in the real estate world. So Inside Real Estate, who owns the CRM KV Core, bought Boomtown, which we use. Boomtown has about 100,000 users. I think it's 95,000 clients according to their website. KV Core obviously is another CRM. It's a competing CRM. And now with the addition of Boomtown's customer base, Inside Real Estate, who is the parent company, will serve more than 500,000 clients. What do you two think about this? Big news? Does this matter for anybody? I mean, it probably hits home for us a little more than most. What do you two think?
personally, I didn't even know about it until Boomtown was down the other day.
Right?
That's not the reason why it was down, for the record.
Okay, but it was down. And then Curtis said, well, maybe it's because it was sold. And I was like, huh? So I didn't even know. So I think and I'm in the business, you know what I mean? So I don't know. I didn't know about it. So obviously it wasn't big news, but, it is big news.
Yeah, I mean, when I first was taking a look here at the article, in blue here, it said something about Zillow. And I was like, wait, that would be huge if somehow Zillow integrated into that and then had access to all of your customer profiles and all that information and linked all, that would be huge. Some other company acquiring it, I don't see it affecting it that much.
Yep.
So it sold for $330 million. So I think in any transaction that's that big is big news. I find this interesting because we went through this era of all the companies were trying to come up with their own CRM. And then Remax recently rolled out KV Core. I know some other people are offering that as an in-house brokerage CRM. We've been with Boomtown for a very long time. I think it's been 7-8 years now. So in my view, this is a big deal because Boomtown had this sort of, you were invited to speak on a panel at the Boomtown event last year. Stacey was. They have this sort of, it was this different group of clients than you saw with most CRMs. The loyalty was pretty fierce. And Greer Allen, the CEO, he's going to stay on as a chief strategic advisor. There's a lot of people I know there that I know some of them got laid off. Some of them are going to have to re-interview for jobs. So these mergers aren't easy, and they had a pretty incredible network. So what I envision happening here is I think it's, either they keep the platform or they don't, which could be bigger news for a lot of people. It just shows you how valuable it is to take care of your clients because a lot of these CRM companies, they don't do that. Boomtown was very good to us, and I'm a little disappointed personally that they got sold because I don't know inside real estate from anybody, and I can't imagine we're going to get the same sort of VIP treatment that we did from Boomtown. So that's probably the most disappointing thing with me. And it tells you they had a viable business. I mean, they sold for $330 million. So congratulations, Greer. I'm happy for you. I mean, I actually knew about this the night before they called us. They called me specifically. That's how big of a deal it was. So it's I'm hoping it'll be good for the platform, but I don't think anybody really knows.
Yeah.
I mean, we've seen these mergers. It goes one of two ways. It either goes great or it goes horrible, and they start cutting people. So I'm hoping it's the former and not the latter.
But they have treated us very well. You're right, Tom. We if there's an issue, they're on it right away.
Yeah, for sure.
So I really hope that doesn't go away. I hope that continues, the customer service part of it. But yeah, I had no idea.
You shouldn't know as a client. I mean, and this is so. I think for people that actually are, your job is to go sell houses. So I love that your focus is so focused on that, right. Stacey. That's why you're great at it. I think it's more of, people that are in, okay, I'm responsible for this, or this is part of my job. Then that's the issue. So, I don't know. I think it's a big story depending on who you are. And anytime a company gets sold for that much, I mean, congrats to the founders. So way to go, Greer. Enjoy fishing on your boat. Second story here. Pocket listings, the clear cooperation policy. If you don't know what that is, it basically says the home has to be on the MLS within 1 business day, or you can't market it unless it's an office exclusive listing. So the top agent network, which is the top agent network is a separate sort of it's a network of agents that have filed a lawsuit against NAR in May 2020 over the policy that was designed to curtail pocket listings, which are listings that are held off the open market. So now the DOJ's involved. Never a good sign, in my view, when the DOJ gets involved. And they are investigating NAR over their pocket listing policy and some of these rules. What do you think about this one?
Yeah, like you said, whenever the DOJ gets involved, I don't know. It usually turns into more of a debacle than necessary. So I know that in our market, it's so difficult anyway that, the competition, and if there are pocket listings, can you imagine how the inventory would continue to be?
Right.
But that's on as an agent standpoint,
Yeah.
you really hope that there's no pocket listings going on because we would never be able to see anything.
Right.
We wouldn't get to that point to take our clients out.
Right. And I mean, you do see them happen when like something like, it
Goes active and pending.
within like minutes. Yeah.
Yeah.
And you're like, well, clearly something.
That was an inside job.
Yeah. Yeah.
So this policy, the problem I have with it, it tells sellers what to do with their house, and that's the issue. I mean, and we don't have as much of this here, but imagine if it's someone that is a public figure or a celebrity, or they're getting divorced and they don't want people to know. There is value in having the home off the market. I think it's really anti-competitive at its core. I mean, most people, the best move to get the best price is take your home to the market. There's no question about it. I don't see that being that's not what I'm arguing here. But who's to say that the NAR governs what someone does with their house? You're almost forcing them to go for sale by owner or go with a non-realtor entity. So NAR is almost like cutting its nose off to spite its face, I think is the saying.
Right.
So that's the problem I have with this. The DOJ, it just doesn't make sense. And just from a logical perspective, it wouldn't be the first time there's been a rule that doesn't make sense. It's in business. So I think that they... there's a chance. This is the second suit that's out there about this. The PLS, it was like, which was a California-based group that's pretty similar. They call it the Pocket Listing Service. These lawsuits that come out, and I wouldn't be surprised if they overturn it because of like antitrust rules and different things. It could go either way. I don't think it's good for NAR, and I'm clear the rule's kind of stupid in the first place. So. I mean, you see companies, they have like, they'll just market it as like office exclusives. It's no different.
Right.
So I think it's actually caused people to really curtail it even more, because if someone's at another brokerage, Stacey, and you know them or you've done business, they can't call you and say, hey, I got this listing. We're going to keep it quiet. And I think there is some value to that in some cases.
Yeah, especially like you said, public figures or just high profile people. I think they want their privacy protected.
Right.
And I can totally understand that. Especially crazy world today sometimes.
Yeah.
Well, in California, it's obviously a lot more different. I think that's a place where you see this happen a lot more. So,
sure.
Now here's an interesting stat. So, because of this rule, 45% of Compass listings in San Francisco were withheld from the MLS as office exclusives.
Wow.
So I think it's caused a lot of that. And Compass has been a company where they're like, hey, we're going to do office exclusives and sell it off market. And instead of just reaching out to your network of agents, it's actually hurting the other agents. And so that's the issue I have with this.
Yes.
Public marketing doesn't mean you can't market to other agents. That can still be a quiet listing if someone reached out to Sarah or Stacey about a property.
Well, that makes sense. Yeah, that's a huge number though.
I hated this rule as soon as it came out. I mean, I just don't think it makes any sense.
Yeah.
So
but
story, non-story, what happens here?
Well, I think it's a story because I don't like the government getting involved in anything. The DOJ is getting involved. So that in itself is a story.
Right.
It's like, stay out of it.
Do you think this is going to get overturned?
Well, I know the other.
They dismissed the other case and they sent it back to the appellate courts.
So we're waiting to see what's going to happen there. Yeah.
I guess. I mean, these guys move so slow anyway. This has been going on 3 years. This started in 2020.
Yeah, I mean, I feel like whatever it is that ultimately happens with it, it's not happening anytime soon.
Well said.
The DOJ involved.
It'll keep getting just like kicked around yeah.
Got it. All right. So we got a story kind of and a definite story for the second one. So if you're not paying attention to this stuff, I would argue that you might want to get more in the know in the real estate industry, especially the latter. But overall, I mean, this is the kind of stuff that happens in real estate. It may not be the sexiest, but that's what we're talking about. So we're going to take a quick break. We're going to come back. We have Insurance Palooza coming up here with Kevin Hamill. 4 things to make sure people are getting the right type of insurance coverage. Kevin's with Alliances Insurance. So we'll be right back on Tool Time Real Estate Radio on WWDB 860 AM.
You shouldn't
Oh, yeah,
have to
I
deal
always
with all the
drink.
red tape when getting your mortgage from a big or online bank. At Mortgage America, we have access to big bank money, but with the personalized and detailed service of a local bank. We are here in your community and ready to serve with fast settlements, low down payment options, and first-time homebuyer programs. Pre-approval is free, no costs or commitments. For more information, visit our website at mymortgageamerica.com or give us a call at 610-439-8000.
Mortgage America's equal housing lender. NMLS 128501.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America's equal housing lender. NMLS 128501.
I'm Tom Toole of the Tom Toole Sales Group at RE/MAX Main Line. If you're thinking of becoming a real estate agent in the greater Philly area, I have a special offer for you. Our team did $165 million of volume in 2021, making us the #1 RE/MAX team in Pennsylvania and a top 1% team nationally. Our agents love us because we offer them a successful career, a great life, and an unbeatable culture. Agents who've been with us for at least a year average 30-plus sales. Even our brand new agents average 17 to 24 sales a year. We offer proven systems and expert training. We help you set more appointments and sell more houses. Now here's the offer. If you don't have a real estate license yet, we offer real estate scholarships so you can get one for free. Check it out at realestatescholarshipprogram.com or visit the Tom Toole Sales Group at RE/MAX Main Line at tomtoole.com. That's tomtoole.com. Get more out of your real estate career, and remember the real estate golden rule. You always get more when you work with Tom Toole.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
All right. We are back on Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. She's Stacey Mitchell. Gabe's behind the camera, and we all work at the Tom Toole Sales Group at RE/MAX Main Line, the #1 RE/MAX team in Pennsylvania since 2018. And we have Kevin Hamill here from Alliances Insurance. Before we get to that, you want to check out the show. We're streaming live every week. Facebook, YouTube, Instagram. Just look up Tom Toole Sales Group. Give us a like. Subscribe to the channels. And Kevin with Alliances Insurance. What's the website, Kevin? You've been giving out your cell phone number. Let's actually drive like some real traffic here for you.
Alliances with an S at the end, insurance.com.
Love it. So alliancesinsurance.com, if you want to get in touch with Kevin. I will give a personal testimonial here before you get into what you're going to talk about. I have dealt with a lot of insurance people, and most of them don't know anything. Kevin is the kind of person you want because he can give you the right kind of coverage. He can help you save money in certain areas, do a free review on your policies. All that in mind, he's also helped clients who never do business with him understand what's going on with things like flood zones and roof replacements. So, I mean, this is the advocate you want in the insurance world. And a lot of times, homeowners kind of like forget about the insurance policy until like 2 days before settlement. And they're like, hey, I need to get some insurance. And they call a big box company. You're going to talk about ways people need to make sure they're getting the right coverage, which I think is super relevant right now, especially with a lot of the disasters that we've had going on. So, Kevin, take the lead. Give us what you got, and then I'm sure there'll be some questions.
Thanks, Tom. I appreciate it. And to piggyback off what you said, I actually have lost some clients or business because I refused to write the policies just for them to get a policy. In other words, I don't want to deal with the backlash for when a claim happens because you have insurance to cover things, right? Mm-hmm. And you never really need insurance until you need insurance. So, if you don't get a lot of the coverages that we suggest that aren't in a standard homeowners policy, then most of the time I'll just say, you know what, I'd rather you go somewhere else. Yeah. I like happy customers. And like you said, Tom, that's actually 100% why I wanted to come on here today with, all the supply chain disruptions, the parts and labor cost, and like you said, the inflation. Replacement costs of your home has gone up significantly, right?
So what does replacement cost mean? Because and I know we do this. We tend to talk in like jargon that people don't get. So what's the replacement cost?
Right. Great question. So replacement cost is if your house was in insurance terms, we're always thinking about the most catastrophic event. So your house burns to the ground. We have to clean the debris, and then we have to rebuild it to the way it is now, right? And a lot of people look at the replacement cost or how much the insurance is on the house, and they'll say, well, if it's $500,000, and they'll say, well, I only paid $350,000. Well, that's the market value of the house. That's what you were willing to pay. Then there's also an appraisal value, which could also be different from the market value. But the replacement cost, more times than not in this area, it's going to be higher than what the market value is. If you were to put your house that you're in now in Detroit, Michigan, then the market value is going to be a lot lower, right? But if you were to put your house in Bel Air, then the market value is going to be higher than the replacement cost because that's an attractive place for everyone to live. But we want to get full replacement costs, so put it back exactly how the house was, obviously with new things, when it started. And people don't really realize how much that really is, because think about a kitchen renovation. That's like $80,000. Yep. Right? And that's essentially what we're doing. You're getting a rebuilt new kitchen. Especially people that have not reviewed their policies in, I would say, at least 5 years because of the inflation, this is definitely the best time to at least contact your agent, if not me. Cell phone 267-614-4234. It's definitely a time to look into it, to make sure that you have adequate enough coverage. And the other thing that people don't look at is if they have a remodel to their house, or they do something on their home, well, that increases the value of the replacement cost. So you want to make sure that that's correct. Like if you finish your basement and we did the replacement cost without your finished basement, you really want to call us. The other way that could hurt is if you're only, say, 80% to the replacement cost, so you're insured only 80% up to the full value of the replacement cost. If you have a roof claim, let's just say, it's one of the most popular claims out there, and the roof costs $10,000. Well, you're only covered for 80% of the replacement cost, so the insurance company is only give you $8,000 to replace the roof minus your deductible. So essentially, you're going to be on the hook for some money. So ways to sort of protect yourself is to have a home cost evaluation. Ask your insurance agency agent for a copy of that, cross-reference it, and talk to him about any discrepancies. Most carriers will send somebody out and have somebody that does that for a living to appraise your house or inspect your house. And then there's also different types of coverage. You have basic replacement costs, which is going to literally pay up to the value that you have it insured for. And then there's also guaranteed replacement costs, which is what most of, if not all of the policies in our agency have, which is they will pay to repair it regardless of the actual replacement cost. But again, to the original specifications. So if you had a remodel, they're not going to include that in the remodel.
Without you going in and upping the coverage to add that.
Right, and without letting us know about it.
Yeah.
And then you also want to make sure that all of the home features are included in the cost evaluation. So, like if you have high quality craftsmanship done on in your kitchen, or if you have nice cabinetry or something along those lines, it costs a lot of money. So it's going to increase the cost. Then again, at the same time, there are also some things that you could be saving some money because insurers are also, experiencing a lot of weather disasters that are increasing rates for them. So that's the key to being insured with an independent agency, because we can shop the different carriers. Some carriers, they just increase their rates, and you're supposed to take it, I guess. then it's definitely a thing. I mean, there was over $1 billion of weather-related losses in 2021. We're all paid for that.
Say that again. $1 billion in 2021 of weather-related losses?
That is correct. Yep, $1 billion. And we're paying for that. Most insurance companies actually in 2021, they reported a loss.
What about 2022? Or it's not calculated?
Yeah,
yet?
it hasn't been calculated yet.
It's probably going to come higher. I would say that it probably beat 2021.
Yeah, most likely. And then another thing that the insurance carriers have been doing, especially the big box stores, because of the wind and the hurricanes, they are putting a wind and hurricane deductible on policies and kind of just sneaking it in on the fine print. So that could be as much as 5%, which when you're talking about $1 million home, that's a pretty big deductible that you have to pay before the insurance company kicks in. The other thing that I think is important is new coverages. So a lot of people, the older generation, they haven't really looked at their insurance because they get the bill, you're just paying the mortgage. They don't look at the insurance policy at all. But there's new coverages that are out there. Service Line I've talked about before, which basically covers all of the utility lines buried underneath the ground to service your home, electric, gas, most importantly, the sewer. So the sewer line going from the street to your house and then from your house to the street. Unfortunately, septic tanks are not included in this because they always end up failing. But that is definitely something that you should be looking into with your insurance carrier. It's actually less expensive and greater coverage if you get it through the insurance carrier rather than your utility company.
I've had a seller before who buyers did, inspections or whatever before going in. There were some issues with the sewer, and they did have that policy in there and insurance covered to go in and get it handled.
Yep.
And it was like, when that first came in, we were like, oh my God. And then they were like, let me just call my insurance. And I was like,
it's happening a lot with the houses that are, say, like 30 years old because you have that clean out tank in your front yard, right? And no one wants to stare at that. So most people just threw a tree in front of it. But the tree grows, the roots go. They have to go somewhere. They're going to go and crack the pipe. The last one that's starting to become more and more relevant as we become more and more digital aged is cyber liability. Used to just be for business owners. But
this is a problem.
Yeah.
Big time. So now it can be an endorsement for homeowners. Just in personal data breaches, $149 million per year for Americans. And 1 in 4 Americans have been a victim of cybercrime. If you have a child who is between 12 and 18 years old, you have to have this coverage. They all have cell phones now. You usually give your son or your daughter a phone when they're 12, and then they're clicking on whatever. I have two of them right now. They click on whatever comes over the phone. Oh my gosh. And it's scary because these people are getting smarter and smarter with cracking into your computers, and they could take all your family pictures, your bank accounts.
The amount of fake Instagram profiles of me that ask people for crypto is insane. I mean, this happens all the time, and I'm not even doing anything. It's just, and that's unsolicited. I can't imagine a 12-year-old.
Yeah, they have no idea what's happening. I mean, they're saying it in school, but at the same time, that they might even just do it by mistake.
Yeah, for sure. No, that's the point. They don't know what a scam is.
Exactly, and then all of your stuff now they're in your home network, and now all of your stuff is vulnerable, and now they can hold it for ransom, and you don't want to be paying somebody $15,000 just to release something that you could have protected for as little as $25 a year. That's how much it is, $25 a year to add to cyber protection.
I think it
Sign
goes
me
for
up.
older parents too. Sorry, I have to throw that in there. Because she's always clicking on stuff.
Right.
Our number one fan.
Yes.
Well, the online shoppers. I mean, that's that's the
Yep.
biggest culprit right there for sure. And that's all your bank accounts. That's they could go after retirement. Everything's on your computer now. Your whole life is on your computer. Your whole life is on your phone. So you gotta protect it. So I think the cyber liability, it's not every carrier has it. They're starting to come out with their own little versions of it. Some help with cyber bullying. I don't really know how. It's more or less the cost with it from what I understand. But it's definitely something that you should be looking into when you're purchasing or talking about your homeowner's insurance. And again, another reason to review before you renew.
So a quick question. Do you have, I know you talked about the sewer line coverage.
Yes.
Is there a water line coverage also?
You mean like the water line from your house?
From the street to your...
Oh, yeah. Yeah. So it covers the line from the street to your house and then from your house to the street.
Okay.
So two separate lines.
Got
And that's typically at least a $10,000 claim.
Oh, easy. The reason I asked because I had a client and before she listed her home. This was actually the nail in the coffin. She had a water line break from the street to her house, and it was $18,000.
Yeah, it's because
And she didn't have coverage.
Oh,
Yeah.
and they're digging everything up. I mean, this coverage will help you put your landscaping back too. You know what I mean? So it's definitely something you should talk about. And again, that coverage can be as little as $24, depending on the carrier.
Good to know.
All right, so you want to get in touch with Kevin. It's alliancesinsurance.com. I cannot stress, it's never a problem until you have a problem. And I think that's the best way to look at insurance here. And that's why we continually have him to come on the show. He is our trusted vendor, number one insurance person I've run into, and we've been doing this a long time. So alliancesinsurance.com. That's it for this week episode. You can follow Stacey on Instagram at @2 Mitchco. You can follow Sarah at Ty_Ty Time. She is very active on social media. And you can follow me at Tom Toole 3RD at Tom Toole the Third, and make sure to tune in every week. Facebook, YouTube, Instagram. Just look up Tom Toole Sales Group. Subscribe and follow, and we'll catch you next week on Tool Time Real Estate Radio on WWDB 860 AM.
Go Birds!